Well, the rand has had a heavy week, with the currency having reached its lowest breach to the dollar since the start of the COVID-19 pandemic. It's been a painful week for the rand. This happens as the country deals with unending blackouts, an accelerated inflationary environment, and accusations from the US that South Africa has been providing aid to Russia. Andre Cilliers, director and currency strategist at TreasuryOne, joined the business lunch team, giving more insight. Here's that conversation.
So if we look at the rand and we unpack it a little bit, then I'm not going to say that everything, all the woes of the rand can only be linked to that explosion of the bomb, as you term it yesterday. We have to go back to some of our own domestic issues, and the number one issue there obviously is that of load shedding. Load shedding that adds a tremendous cost to the doing of business in this country, especially on the smaller business side, where they do not always have the same access to capital than big corporate companies have. But, you know, that cost of doing business is being passed on to the consumer, and we see that in persistently high inflation rates, especially on that side of the food. But there we must not just think in terms of the retailers that sell the food at the high prices. We must think in terms of the producer that needs to produce the food for us and get it to our tables. They're also facing with this massive load shedding. And once again, some of them is not on the corporate side, but some of them are on the smaller company side that doesn't always have the access to capital to have the access to electricity on a continuous basis. Add to that a Transnet that is also in the doldrums and battling to get our exports, especially our mining exports, to harbors. And sometimes our harbors are also not efficient in getting the goods out. And then that starts having an impact on our earning in foreign currency because our export levels are lower than it should be. But it's also got an impact on the fiscus in the terms that their collection of tax is then smaller and slower, which creates a problem for the fiscus. Then you add to that a regulation, you add to that, before I get to that, you add to that grey listing that also was put into our little basket of domestic problems, and add to that the outflow of capital in terms of our bond market, because our interest rate differential between that and the US is not increased, it's actually decreased over the last couple of months. So that risk premium that was offered to investors in our market is not there to the same extent. This, whilst all of these other things happening, actually increased the risk of doing business in South Africa. It made South Africa less investable, and you need a higher risk premium, and that actually came down. Yeah. On top of that, there was a decision that Regulation 28, the 30% be increased to 45%, that fund managers can place offshore, and that created another outflow of capital. Yeah. And then you add to that the indecisiveness of our political leaders. They kind of continuously tell us about the problems, they're aware of the problems, and they institute commissions of inquiry and investigations in this and investigations in that. But it all needs time. And as our dear Mr. President correctly mentions, it takes time to come to fruition. The problem with that time to come to fruition is, as long as it doesn't come to fruition, we sit with a lack of action to actually solve the problems. Now, the time has come not to discuss the problems, not to identify the problems. I think we've had enough time for that, and we know that. The time has now come for us to do something about it and lay the plan on the table so that everybody is aware. And if necessary, and if you can't fix it yourself as government, get the private sector involved in a structured manner, but in a definite way that we can see that they're involved and solve the problems for us.
You know, Andre, you talk about these risks, but also at the same time, I feel like these are not risks that are new to the market. These are quite well documented and well known. And you look at how the Rand reacted from Wednesday, and it went the complete opposite way of what we thought it would go, because you had that US CPI print signaling a downward trend in inflation. I mean, something that does move the Rand traditionally, but it actually didn't. It didn't get much support from that. I want to know why, and also from the risks that you mentioned, would you say that the Rand has reached a point where there's a structural weakness baked into the currency?
There's a structural weakness based into the currency. And what we're seeing at the moment is that in the last couple of years, remember that our economy is very well part of an international economy. And what happened in the international markets and in terms of international growth and expectancy of international growth and inflation rates there and interest rates and all those international factors played in my opinion, a 70 to 80% role in where the Rand would be going. That is now changed. Our structural problems and inherent problems within South Africa has now stepped to the forefront because it's not being solved. As you know, as you've said, rightly, and I said it, it's been identified and we know about it, but it's not being addressed properly. It's not being solved. Okay, so we're waiting for fruition time. And because it's not being solved, those local problems is now stepped up to the forefront. And that swing has taken place where local factors is now taking precedent over the international factors. And so more and more we look to what's happening locally and what's being done locally to change it. And that's the one where we don't see the decisiveness. And that's when that bomb then explodes of a possible supply of weapons to Russia that is an absolute, just an explosion into our face. And then just highlights everything and just puts us on an absolute downward spiral.
Now, Andre, I must ask you, as we speak about this these explosive news coming out, of South Africa from the U.S. ambassador here with regards to South Africa's involvement with Russia, I'm wondering from your perspective if we do risk sanctions and if South Africa was sanctioned by the West, would that completely tank the Rand?
If we were to be hit with sanctions by the international side, and that's the European side and the American side, so the Western part of the world, then we will certainly, this Rand will tank and we will see levels well in excess of 20. Sure. Because that would be disastrous for our trade. It would be disastrous for our exports. We must not forget that the biggest portion of our exports is still to the Western world and not to the side that we're siding with at the moment. And we must remember that we cannot distance ourselves and loosen our relationships or hamper our relationships with those people that buy the bulk of our goods. Yeah. We must understand that that will have a dramatic impact on the actual goods that gets exported, the cost at which it gets exported, markets that cannot be immediately replaced, and the impact of that on the thousands of people that work in industries that will be negatively influenced, people who will lose their jobs and will fall on hardship that the government doesn't have the money to assist them.
And just lastly, Andre, we have run out of time, but I just want to ask you, everybody's been asking, so who's going to pick up the Rand? Is it an upward cycle in the commodity cycle? And do you maybe have an idea of when we could see an upward trend in those commodity prices?
See, here's the problem. An uptick in the commodity cycle and an increase in demand in the commodity cycle depends on how well Transnet can actually get our goods to the harbors. You see, you can see where the problem starts coming in.
Yeah.
Even the uptick we might not participate in that uptick because we can't get our goods there. So will we benefit from an uptick as much as we should be? I doubt it, because we have structural problems that we need to address.
Yeah. Well, that was Andre Cilliers, Director and